Right, let's get straight into it. Forex trading might be the most complicated industry to look into as a beginner trader, or even as an intermediate trader trying to find the right strategy and the way to consistently profitable trading. Now, in this video, I'm going to break down the exact route to becoming a successful, profitable trader, whether you're using funded accounts or personal accounts, and the exact route to financial freedom that I have personally used to become a full-time trader. Now, this video is going to be relatively raw. I need your full attention, so please switch off any external distractions. Make sure your phone's away, you're watching on the TV or laptop. This information could completely change your life, so make sure you give it your full attention. Now, first things first, you might not know who I am, so if you do already, skip a couple seconds ahead. But if you don't, my name is Rob Dono, or Don's FX. I've passed $2.6 million worth of funded capital. I've been on multiple leaderboards as a funded trader with prop firms such as FTMO and Funded Engineer. I've also mentored over 200 traders and created 60 six-figure funded traders. I'm going to be mentioning multiple students that have gotten to a very good level of trading throughout this journey. And there's absolutely no reason that you can't do the same if you're giving this video your full attention and actually taking action after watching this. So first things first, we need to set the standards. We need realistic goals, we need realistic expectations, and we need to understand the dedication that we need from you to be successful as a trader. It is not as simple as joining my free group, depositing with my broker, and taking every trade that I place in. Because that will not make you a profitable trader, that will get you scammed. You're not developing the skill set yourself, you're literally just copying and pasting some guru online who you have no idea if they're actually a trader or not, or if they make all their money through the commissions from your deposit into their broker. That is the first thing I want you guys to be aware of and be cautious of is signals. Time, location, financial freedom, that is all a byproduct of your skill set and no one else's. You should want to rely on yourself, and that is it. Now, let's talk about length of time to becoming a successful trader. Generally, I would say I normally see my traders become successful after a year of trading, but they're also going at it full throttle, and I'll just say that is the average out of the people that we've gotten funded. But I have seen people get there in just a few months, but I've also seen people get there over 3-4 years, myself included. At which point someone becomes a successful, profitable trader, it's all about consistency. You want to be gaining percentages every month, and obviously as that happens, your capital will raise and you'll be able to make more and more profits as the months go on. Obviously, you've got to understand the markets are not going to show the same patterns every single month, so sometimes conditions will affect the amount of money you make each month, even if you do have more capital than the month prior. So, general expectations is if you're doing it without a mentor, I would say you're looking at normally 3 or 4 years, to be honest with you. The reason why a mentor does increase that speed by quite a bit is because you're learning straight from the horse's mouth on exactly what to do and what not to do. Think, if you have an issue that you don't understand where your problem is, why you're getting bad results, why you're getting a bad win rate, etc., you might spend months or years watching videos that you think are helping you, but aren't in the slightest. But you wouldn't know that because you're not on the other side of the fence. A mentor who's gone through that whole experience, got onto the other side, and actually are profitable, can look at and review your trades, tell you where you're going right, tell you where you're going wrong, and make those changes for you, or give you a solution, give you the information that you need, and then within half an hour, you've got that to work away with, compared to potentially years if you never find it on a video. Like I said, realistic expectations, I wouldn't try and do this in a month or 2 months or 3 months or 4 months or 5 months or 6 months. I would look at it as a yearly spectrum. At the end of the day, if you want to change your life of trading, then why would you give up after your first year anyways? If you look at uni, for example, most people are happy to spend £40,000+ to go to a uni where they're living in debt with no money for 4 years straight, learning a degree that they might not even use in the rest of their life. But most people that start trading will give it a couple months, and if they don't see profitability, they'll quit. And unlike uni, you don't have a 40k debt over your head that keeps you in the degree for a long enough time. So literally, if you're coming into this video and you're serious about it, then just be serious about it. You actually need to take this seriously. You need to give it the effort. You need to put in the hours. You need to get the right information in front of you. Otherwise, you may as well just go off to uni. You may as well just learn a different skill set or just stick to a 9 to 5. So yeah, in the long run, you may get results off that first year if you're a good trader or if you've gotten a lot of information quickly. Like I said, with a mentor, that's my second takeaway from this section, is that a mentor will speed up that process to results a lot quicker, just naturally will, because you're getting that information directly to you. I would say for a good mentor, it is worth paying for, but only if you have the funds available. For example, it took me, 3 years to become profitable in terms of getting consistent results, big funding, etc. Whereas we're getting people like Dan, for example, who's a year and a half into trading, getting payouts like this every month. And he's a full-time trader a year and a half into trading. It's ridiculous. He's completely changed his life. He's a full-time trader. He works with Woke as well, which is a company that I own. And yeah, he's completely done a 360 on his entire life. He was in a bunch of debt. You're going to speak to him probably in the next video, or listen to it at least, because we're going to do an interview. But started Woke in debt, started trading in debt. Year and a half forward, he's making, 20K a month, full-time trader. And that's all due to him and his ability to take action on what he wanted to do. He joined Woke, he gave it his full attention, he made the most out of every piece of material that I offered him. And yeah, look at that, the results are there. But I guarantee you 90% of you that are watching this video aren't even going to click the link below, or aren't even going to watch another video, because you don't have the time and attention span to give this or anything the proper attention it needs to be successful. But if you are that 10%, then you do have the option to book a call with me or Dan or anyone in Woke below. We'll give you a free insight on the process of becoming a trader with us. Like I said, this video is going to tell you how to become a trader anyway, but if you want to learn exactly how you do it with us and with me, then book a call below with the link, and we'll talk through any different plans to get you involved, or just our free community. So yeah, right, let's get back to it now. So you've got your realistic expectations, you know what you've got to do to see success, but how do you actually trade? Now, there's a few concepts that I use, and I'm going to lightly go over them in the next 10 minutes or so. So the main concepts that I look into is market structure and price action, timing of price and sessions, liquidity, and I relatively look at order blocks, but they're becoming, in terms of my trading, I look at them less and less and less, so supply and demand, that is. So when you're looking at market structure and price action, you need to understand a bullish, bearish, or ranging market. So you're understanding how price is moving, whether it's creating higher highs, higher lows, higher highs, higher lows, or if it's creating lower lows, lower highs, lower lows, lower highs. And then if it's ranging, it's kind of creating equal highs, equal lows, or like a higher high, then a lower low, then a lower high, then a higher low. Like it's kind of just like all over the spot. That's what a ranging price action moves, where it kind of consolidates along the line. Another thing that you need to look into is execution models using price action. So understanding what a breaker structure, a change of character is, or you might call it market structure shift, whatever you guys do call it. And this is where price shifts from a bullish or bearish market to the opposing direction. So let's say you're bullish, you come into a key POI and you've got higher highs, higher lows, higher highs, higher lows. Then you sweep some liquidity, come into a POI, and then you suddenly shift from a bullish to bearish market. That might give you an indication to short the market as you come back towards some internal range liquidity to then move to that external high afterwards. But yeah, that's one example of price action market structure. The next thing that I look into was liquidity. I did mention in there a little bit. Liquidity is based around orders. When you're in a market, you have to have buyers and sellers. So if institutions are wanting to make a huge move in the market, they need to have as many orders in the opposite direction as possible. Let's say they're wanting to long the market with a ridiculous amount of lots. Then what they'll do is they'll stop hunt anyone already in long positions, so that when they get stopped out, they're actually technically selling the market. So think, if you long price here and your stop loss is here, if price comes down, hits your stop loss, you have to sell the market at this point, and the difference is how much you've lost. Equally, if you're shorting the market here and you have your stop loss up here, if price then comes up, you're then buying back the market here, and the difference between the price is how much you've lost again. Now, why would that happen? Is because when you're buying or selling back the market, you're freeing up orders for the institutions to then place bigger lot sizes. So why is this relevant? Is because basically that liquidity matched with an execution model, matched with sessions and timings, will mean that you're getting a higher probability trade. If you then pair that with a supply and demand, which is basically where prices previously reacted and created a change of character or breaker structure with impulsive movements, that is really kind of the ideal scenario that you'd look for in the markets, for at least the way that I trade. Will you get that every day? Absolutely not. And one thing that you need to understand in trading is that you can't take positions every day unless you're a pure scalper trading off a lot lower criteria positions, compared to a more intraday trader that basically takes expansions. So I trade expansions in the market. but it won't meet your criteria if you've got a really specific and strict trade criteria. And that moves me on to my next point, which is you should absolutely stick to one strategy with a very, very clear trade criteria. What time are you taking your positions? What market are you trading? What confluences are you looking for every single time you take a trade? What's your execution model? What's your max amount of time within a trade? All of these different things determine your success as a trader, because if you're good enough to follow that strategy, that will give you the exact win rate, the exact probabilities of you making money every single month with the exact fixed risk reward. And that is the quickest route to making money as a trader, the absolute quickest route. We've taught so many people now, and all the ones that follow a mechanical system, and I can go through that obviously for anyone that does join Woke, we have mechanical systems in place. You can trade this exact trade criteria, backtest it yourself. We've backtested it, we've forward tested it for years. We know it wins X amount of time and gives you profitability. And that is the quickest route to being a profitable trader consistently and being able to leave your job, being able to be this financial time location free guy that you want to be. Cool. So that is the concepts that I use as a trader, and they're the concepts that you can use as well. I would go look at it. I can make more videos on them if you want, but I don't want this video to be like fucking an hour long, 2 hours long. One thing that I've got to say is that is a mechanical style of trading. As you grow as a trader, you can add discretion into it because you get used to the market, you've built up that experience, and you've seen the market play out for a longer period of time. So you trading more discretionary makes more sense, but you should still collect data on yourself, collect data on your back testing, forward testing, just how you see the markets and how you trade. Otherwise, you can't improve. You can't improve on anything that you can't collect data for because you have nothing to improve on. You don't have that data there. There's a reason why all the footballers and all the sports stars have data on everything they do in the match, and then after the match they'll have analysts go through all their data, whether it's the amount of kilometers they've run, the amount of tackles they made, their pass completion rate, because that's the kind of data you can improve on and you can work on when you've finished your match and you go into training. And it's the exact same with trading. If you don't collect data on your trading and your style of trading and your strategy, then you can't improve it because you don't have that data there. So that is one thing I would definitely say you should do, is always be back testing, journaling, forward testing, and just like I said, always collecting that data, because otherwise you can't improve. And that's for discretionary and mechanical traders. One thing I'll say if you're trading mechanically is that think about the reason that you've come into trading. You've come into trading to get time and location and financial freedom. So if you're here for time and location freedom, does that mean you're sat on the charts all day, every day to take a position? Absolutely fucking not. You've come into trading to live a fun life, go out, travel, go to the gym, become a better person, a more experienced person of life. Why do you feel the need to sit in front of the charts all day, every single day, if that's not even the reason that you got into trading? Sure, you can love the experience of trading, but at the end of the day, that will not make you a better trader. You want to be trading at a specific time in the day. If you stay on, you're just going to end up over trading. You're going to end up taking lower quality positions. You're going to end up losing your profitability, which is so backwards because that's the reason that you got into trading. You got into trading to be profitable and for it only to take up a couple hours of your day. So that is one thing that I'd say, especially mechanical traders, please do keep to restraints, keep it very precise in the way that you're trading, and don't divert away from that. Okay, cool. I've covered a fair bit in this video already, but what I'm going to do now is talk about funding. Now, I don't partner with any prop firms. I do use a lot of them, such as FTMO, ACG, SendFX, One of One, Fund Engineer, that's gone now. My Forex Funds, that's gone now. The Funded Trader, Day Funded, they're gone now as well. So as you can see, I've been funded with a lot of prop firms and I've had a lot go down on me as well. I've lost around $900,000 in funded capital. Now, I'm not here crying about it. It is what it is. Other people lost the same amount of money. So I can't be too upset. The skill set remains the same. I'm still absolutely fine. Why I wanted to make a whole section on this is because prop firms generally is the best thing for a new trader, because if you've got, let's say, £500 and you're wanting to make £2,000 a month, for you to make that £2,000 a month from £500, you're needing to do 400%. You're not going to make 400% every month. Simply won't happen. So what you can do instead is that same £500 can go into an $100,000 challenge. You can pass phase one, pass phase two by making normally 8% and then 5%. And then once you're funded, all you need to do is make 2% to make that $2,000. So my point is that Trading is a capital game and prop firms offer you that capital. And as a new trader, I also wouldn't put in like 10, 50, 100 grand, however much money you've got into a live account straight off the bat, because you have no idea how to trade. You have no system that you've traded for a long time. You have no psychology. You have no risk appetite. You've not understood the way that trading works yet. And that's why I think prop firms are a good thing, is because they have rules that keeps you in that mindset of, okay, I should only be risking 1% a trade. Okay, I should only really be taking one trade a day, max. And that kind of way of trading is what's shaped my trading career and why I see so much success on my personal account as well. And I'll be talking about how to grow one of those in the future as well. Funded accounts, I would say the best ones are FTMO and ACG at the moment. They're starting to go a bit iffy in my opinion. I would just stick to FTMO. There is some new ones coming about that do look relatively good. You've got Awana's prop firms coming out. You've got IC funded, which I don't know if it's IC markets. It looks way too similar to not be. Otherwise, they're going to have a very big lawsuit on their hands. But yeah, there's going to be some bigger brokers coming into the prop firm space, which is a good thing because it means that they're more like, they're not regulated, but they're more proper in the fact that they're from lasting companies that have a name and a rep and a brand that they wouldn't want to ruin by having a prop firm go under. That is prop firm trading, and to be a prop firm, again, ideally you want to be learning from a funded trader and someone who's proven result after result after result. For example, I learned from someone who actually didn't have that, and that's why I created WokeFX. But whoever you're going to be learning from, you want to do your due diligence on them. So for example, for me, you can see the certificates, you can see the payouts, you can see the leaderboards. You can go onto my YouTube and watch me do an account live all the way from phase 1 to phase 2 to a 10K payout. Or you can watch another video where I do again, a brand new account, phase 1, phase 2, 24K payout. So my point is that you want to be watching someone with actual proof that they're a trader first before they're anything else, and they actually have the skill set to be in that top 0.28%, because that's the percentage that you need to be getting payouts from prop firms consistently. And it's not just me, there's tons of people at WokeFX. I mean, look at all these results, look at all these payouts, look at all these lives that we've changed, because they're actually taking trading seriously and they're watching videos like these and understanding the proper steps to become a trader in the first place. We've gone through realistic approaches, the strategy that you're trading with, understanding that there needs to be a risk reward in there. I didn't go over that a bit too much, but you need to understand risk management like heavily. It's one of the biggest things in the world. You can't trade successfully without proper risk management. Understanding what funding is, understanding how to learn properly, and then also what we'll move on to now is psychology. So psychology as a whole in trading is very much you need to zoom out all the time, zoom out. The now is not relevant for the rest of your life. The now is just a small build up to the week, to the month, to then that'll paint the picture of how well you do as a trader. I think myself included, you can get way too zoomed in on one trade, and then if that trade loses, then you're suddenly distraught and your whole day gets upset because you've lost a trade. Obviously, the longer that you go through the experiences, the more numb you get to losing, the more numb you get to winning, because I would say you're equally numb to both. Some days I'll make like 5 figures in one day. I won't even be that happy. I'll just be like, oh, nice, and maybe go for a meal. And that's not me just bloating and saying like, oh, look at me, I make that amount of money. But the value of money in trading gets very, very, very little, because it is literally just numbers on a screen that you don't really like hold any value to. Like, I've lost multiple house deposits and made multiple house deposits on my phone in weeks without even like really batting an eyelid. That's not, again, me just saying that like, oh, look at me, I can make all this money. But it's mainly just talking about the fact that you can get so numb to it. And ideally, you want to find a sweet spot of becoming numb and emotionless when trading and actually taking positions, but then also having times where you actually reflect on the amount of capital you've created and wanting to protect it with all costs. So that's kind of the way it works. So the more capital that you're getting, I need to sometimes have times where I reflect and I look, oh shit, I've made this amount of money. This is 6 figures now, hold back and maybe just like put that 6 figures into something that just does a lot less return in terms of what I do trading wise, because there's more emotions in play. That's a bit on psychology. Another thing is understanding why you're over trading, over risking, under trading, under risking. I speak to so many different traders. Some traders have problems with confidence where they don't trade because they're underconfident on their strategy, or they're just under risking because they haven't had enough experience trading that strategy. Do the work yourself, back test it, get the criteria, get the win rate, get the risk reward, get the profitability over however many months. You'll get confident in that strategy because you've got the data yourself. Once you've got that, there's no reason why you shouldn't be confident when you're taking trades, because you know it provides results. And if you're trading the exact same as you were in the back testing, then you'll get the exact same results. Obviously, you'll get slightly different due to spread, etc., but relatively the same. So that's what I do if you're underconfident or if you're under risking. If you're over risking or over trading, I would actually say do the same. Collect more data, because once you have that data in front of you and you can see you're fucking up because you're taking 5 trades a day, or because you're taking 10 trades a week, or because you're diverting away from your strategy, you're missing out this confidence every time, your execution's off, you're kind of always you're always going for a bigger risk to reward than you should be, you're not cutting a loser short or extending a winners, whatever the way that you trade is, you need to analyze that for your data. Once you've got that there, it's a lot easier to pick up on your psychological mistakes. But if you don't have that and you're not putting in the work that you should be as a trader, then it gets very easy to get lazy, greedy, fearful, whatever it is as a trader that you're struggling with. That's going to build the less data you have, because you can't reflect on that. You can't see that you're going wrong every time. And once you've got that in front of you, you're going to have your trading plan. If you're a new trader, you should have your trading plan, your trading rules, your issues. Like if you're a greedy person, like I would say that's probably my biggest thing, is that when I'm in winning positions and I've got an idea, I struggle to let go of the trade, even if it's in like a big risk to reward. I always just think it's going to be set, when realistically you shouldn't do that. And I know that, and that's something that I've picked up recently. So I've analysed that, I've got data on it, and now I'm improving on that. So I'm changing back to fixed risk to rewards. Now, okay, I've been trading for 5 years, like maybe I feel like I shouldn't need to do that, but obviously I am going to do that because I feel like that's going to improve my profitability. There's no shame in that. There's no shame in knowing that you can improve still as a trader. And that's how you should always look at it, and that's why collecting data is so important. Right guys, I think that is pretty much going to be it from me to show you guys what it means to be a trader and how you can be a consistently profitable trader in the year of 2024 or even 2025 if you're watching this. Obviously we're in Bali at the moment. This shows a little bit as a 22-year-old what you can do as a full-time forex trader. It's very freeing in terms of what you can do. Like obviously we're out in Bali at the moment. We're living in 10K a month villas. Like it's crazy. And that's all because of my ability to trade. And yeah, I mean, obviously, if you want to learn exactly how we do it, like I said, we do have the membership to book in below. We also have a Discord. It's only £80 a month. Literally a gym membership to learn directly from me, Dan, Riley, Jesse, all 500,000 funded traders, all making huge payouts, etc. You also get to join the 60 other 6-figure funded traders in there. And you get access to daily live mentoring calls from me, Dan, Riley, Jesse, breaking down the charts, breaking down analysis, breaking down a Q&A, going through everything that you guys need to go through in that call. And you also get access to all of our previous trades and market forecasts as well. But yeah, that is it from now. I hope you all really enjoyed the video. My name is Rob Dono. Please do follow me on Instagram and TikTok and all of that stuff. And please do make sure you subscribe if you enjoyed or took any value out of this video. I hope you did. And if you want any videos from me for the future, please do comment them below, show some love, and I'll make sure they're done for you as soon as possible. Cheers, guys.